Imagine this, you've got $1,000 sitting in your account right now. What would you do with it? Most people might think of a quick shopping spree, the latest smartphone, or a few fancy dinners. Those things are nice, but they're temporary. They're gone in a flash. But what if I told you that same $1,000 could be the single most important seed you ever plant? A seed that could grow into your financial freedom, making money for you even while you're asleep. The real difference between those who build wealth and those who stay stuck isn't about getting lucky. It's about knowledge. It's about what they choose to do with that very first bit of money. Today, I am going to break down exactly how you can invest your first $1,000 the smart way. Specifically for 2025, even if you've never invested a single dollar in your life. This isn't a get-rich-quick scheme. It's a get-rich-for-sure plan. First things first, let's get one thing straight. Investing isn't gambling. It's not about chasing meme stocks or trying to time the market perfectly. That's a fool's game. Real investing is about discipline, patience, and having a clear strategy. Before you even think about where to put your money, you need to adopt one simple, life-changing habit. Pay yourself first. What does that mean? Every single time you get paid, before you pay your rent, before you buy groceries, before you even think about a coffee, you take a portion of that money and you invest it. This isn't just a tip. It's the foundational habit that practically every self-made millionaire has built their success on. Make it non-negotiable. Alright, so you've got your $1,000 ready. Let's turn it into a powerhouse portfolio. We're not just going to throw it all in one place. We're going to be strategic. Here's the breakdown. First, take $400 and put it into a broad market index fund. Something like an S&P 500 ETF. Don't let the name intimidate you. All this means is that instead of betting on a single company to succeed, you're buying a tiny piece of the 500 largest and most successful companies in the US. You're betting on the entire American economy. Historically, funds like this have returned an average of about 8 to 10% per year over the long run. It's one of the most reliable ways to grow your money steadily over time. You're not picking stocks. You're buying the market. Next, take $200 and put it into what I call your opportunity fund. This could be a high-yield savings account or a money market fund. The goal here isn't massive growth. It's safety, liquidity, and earning a little more interest than a standard savings account. This money is your dry powder. When a great opportunity comes along, or if the market takes a dip, you'll be ready to act without having to sell your long-term investments. Now for what I believe is the most important investment of all. Take another $200 and invest it directly in yourself. That's right. Buy that online course, get that certification, attend that seminar, or simply buy a stack of books on personal finance, business, or a skill you want to master. The knowledge you gain is an asset that no one can ever take away from you. The more you learn, the more you earn. It's the highest return on investment you will ever get, period. With the next $100, let's have some fun, but still be smart. Use this to buy fractional shares of a few individual companies you believe in. Think about the products and services you use and love every day. Apple, Google, Amazon, Microsoft. Thanks to modern brokerage apps, you don't need thousands of dollars to own a piece of these giants. You can buy a slice of a share for as little as $1. This gets you in the game, helps you learn how individual stocks move, and lets you ride the coattails of their long-term growth. Finally, take the last $100 and start a side hustle. This is your seed money for an active income stream. Maybe you use it to buy some equipment for a freelancing gig or inventory for a small reselling business on eBay or Facebook Marketplace. You could even use it to start a YouTube channel or a blog. The goal here isn't to get rich overnight. It's to create something that has the potential to bring in an extra few hundred, or even a few $1,000s a month down the line. That extra income can then be funneled back into your investments, creating a powerful wealth-building cycle. So let's recap the plan. $400 in an index fund for broad market growth, $200 in a high-yield account for safety and opportunity, $200 in yourself for knowledge, $100 in fractional shares of great companies, and $100 to start a side hustle. This isn't just a plan for $1,000. It's a blueprint for your entire financial future. Now, let's talk about the secret weapon that makes all of this work. Time. The magic of compounding is the most powerful force in the universe, and it's on your side, but only if you start early. But as you start, you have to promise me one thing. Do not invest with your emotions. The market will go up and the market will go down. It's perfectly normal. When the news is screaming about a market crash and prices are dropping, the average person panics and sells. The wealthy, they see a discount. They see their favorite investments on sale. When others are fearful, they get greedy. Patience is what turns that volatility, that chaos into a massive opportunity. Remember this, real wealth is built slowly, quietly, and steadily. While everyone else is distracted by the latest get-rich-quick fad, you're playing the long game. You're building a solid foundation. And in 2025, starting is easier than it has ever been. There are dozens of apps like Fidelity, Vanguard, or Charles Schwab that let you open an account in minutes and start investing with just a few dollars. But before you click that button, do your homework. Never, ever put your money into something you do not understand. Financial education is your armor. It protects you from making stupid mistakes and losing your hard-earned cash. Read books, watch videos like this one, and listen to podcasts. The more you know, the less you'll fear. Also, a crucial point, avoid bad debt while you're investing. There is absolutely no point in earning 8% on your investments if you're repaying 20% interest on credit card debt. It's like trying to fill a bucket with a hole in it. Pay off any high-interest debt first. Get that out of the way, and then you can let your investments grow unburdened. Focus your energy on acquiring assets. Assets are things that put money in your pocket: stocks, index funds, real estate, a profitable business. Liabilities are things that take money out of your pocket. Every dollar you spend should be a conscious decision to move you closer to financial freedom, not further away from it. Look, that first $1,000 isn't really about the money itself. It's about a change in your mindset. It's a declaration to yourself that you are serious about your future. It's the first step away from being a consumer and toward becoming an owner. Once you see that first thousand start to grow, even by a little bit, your confidence will skyrocket. You will stop thinking about quick wins and start thinking about building lasting wealth for you and your family. Most people will spend their entire lives dreaming of financial freedom, but will never take that first crucial step. Don't be one of them. You now have the blueprint. Start small, be ridiculously consistent, and let the incredible power of compounding do the heavy lifting for you. That first $1,000 is your ticket. It's your exit ramp from financial struggle and your on-ramp to financial independence. So take action. Don't just watch this video and move on. Start today. The smartest way to invest your first $1,000 isn't about some secret stock pick. It's about starting now and building the right habits. If you're ready to make your money work for you, do me a favor and hit that like button. And to hold yourself accountable, comment "I'm starting today" down below. Let's build our wealth together. Thanks for watching, and be sure to subscribe for more content to help you on your journey. Your future self will be incredibly grateful you did.